And welcome back. To say a lot changed in 2022 regarding our housing market in the US is definitely an understatement. We went from a crazy housing market in the first 6 months of 2022 and then a severe cooling pattern in the last half of the year. In today's video though, I actually want to provide an analysis about what happened in December according to analysis from Realtor.com that was actually just announced today, which is January 12th here. So I have a lot to share in today's video. Let's go ahead and dive right in here. It says here the housing market continued to cool. This is, by the way, for December. The housing market continued to cool with inventory and time in the market, or days in the market, increasing and listing price growth dropping below 10% for the first time in a year. So we're seeing increases of housing inventory and also days in the market, and also listing growth only increased by single digits for the first time in 2022. However, though, it says it's important to keep in mind that the direction of inflation, mortgage rates, and overall economic growth will still impact the housing market in the next coming months. We actually can see that right now because the inflation report, or the CPI report for December, was just announced on the 12th, which again is today. And in that report, they showed that inflation has actually been slowing down. That's causing mortgage rates to actually decrease. So average rates right now are approximately 6% for a 30-year fixed rate mortgage, which is obviously much less than the highs we saw back in the end of October when rates were about 7.4%. So obviously there's some big changes happening to our housing market, and it's going to be interesting to see what's going to happen, especially in the spring months this year. So let's first talk about housing inventory according to Realtor.com here, because they say here that housing inventory increased by 54.7% compared to December 2021. This means there was approximately 244,000 more houses available for sale compared to the same time frame 1 year ago. Increase of 244,000 houses for sale compared to 12 months ago, due to an increase of 54.7% on a year-over-year basis for housing inventory. So here's a really good chart here. I wouldn't actually really call it really good. It's actually nice to see how they show 2017 all the way until 2022, because Redfin only provides analysis going back to 2019, for example. But the color coding here actually could be a little bit better here, because it's a little bit hard to see this. But let me briefly explain. So right here in yellow is 2022. Below that's 2020. In green's 2021. Above here is obviously pre-COVID. So here is 2018 in orange. In blue is 2017. And here's 2019. So obviously pre-COVID, and obviously right at the onset of COVID here back in 2020 right here, and 2021's right here. So inventory increased again by 54.7% on a year-over-year basis, below, or actually higher than 2020 and 2021. But as you can see here, compared to pre-COVID levels, 2017 to 2019, we're way above, actually way below levels we saw back in pre-COVID. So right now, at least at the end of December, there was actually just under 690,000 houses for sale. But going back to pre-COVID though, we actually had over 1 million. Back in 2019, just over 1 million houses for sale. And back in 2018, approximately 1.2 million houses for sale. Now only about 670,000 or 690,000, I should say. So my biggest takeaway regarding this chart right here is that even though we have far fewer houses for sale compared to pre-COVID levels, we're seeing huge decreases in pending home sales, and obviously huge decreases in home prices as well, down about 10% since June of this year. So even though we have far fewer houses for sale compared to pre-COVID levels, looking at 680,000, 690,000 compared to over 1 million, our housing market's still slowing down greatly. Realtor.com also provided analysis regarding the number of houses under contract or pending home sales, because those declined a whopping 36.8% in December last year compared to December 2021, down 36.8% in the number of contracts being signed between buyers and sellers. And this is really pronounced, or actually is really eye-opening when looking at this compared to previous years here. So take a look at this. Again, right here is 2022. Again, a decrease of 36.8% compared to 2021, which is right here in blue. Obviously, a huge decrease compared to 2020, which is right here, over 500,000 pending home sales back then, now only 321,000. What's interesting to note here that back in 2022, we have more or less in line with 2019 and slightly above levels in 2017 and 2018. But again, comparing levels in 2022 compared to 2021, look at this huge disparity because back in April and May of 2022 compared to the same time frame in 2021, there really wasn't much of a difference here in pending home sales. And that went from January all the way until really May of 2022, slightly below levels in 2021. But as you can see right here, contracts being signed absolutely tanked, especially in the last half of the year. Whereas in 2021, they did decrease, but not at the same rate we saw back in 2022. So what's pretty remarkable to me is that even though we have approximately 55% more houses for sale compared to the same time frame in 2021, pending home sales are decreasing big time, down about 37%. So one of the main contributors why housing inventory has been increasing is due to this giant decrease of contracts being signed between buyers and sellers, as you can see by this 37% decrease on a year-over-year basis. What's also quite remarkable regarding this giant increase of housing inventory, over 50% on a year-over-year basis, is despite the fact that we've been seeing fewer new listings compared to 1 year ago. So in December, the number of houses listed for sale or new listings decreased by 21% compared to the same time frame 1 year ago. This is a larger decline than last month's 17.2% decrease. So even though new listings decreased by 21% this December, active listings or housing inventory has increased by over 50%. So speaking of new listings, have a look at this because this is absolutely remarkable because this is actually something I actually wasn't really aware of. Because look at 2017 all the way to 2021, the number of new listings was more or less in line with the second half of the year. Let's just call it May all the way until December for that time frame, 2017 to 2021. We had approximately the same number of new houses being listed for sale compared to previous years. Look at 2022 though. This is an absolute anomaly because the number of new listings absolutely peeled away from prior years ever since really July of 2022. And right now, a giant decrease of 21% on a year-over-year basis in the number of new listings compared to 2021. In my personal opinion, why we're seeing this huge decrease of new listings compared to previous years is due to the fact that a lot of people like myself have mortgage rates of less than 3%. A lot of people have rates of less than 4%. And with rates approximately at 6% right now for average 30-year fix, a lot of people don't want to give up their historically low rates and sell their houses. And of course, our housing market has been slowing down big time as well ever since June of 2022. And this is obviously one reason why a lot of people are not listing their houses for sale as well. What I'm really excited to look at is what's this going to look like in the spring, because in the spring months, we typically see a huge increase of new listings every single year. You actually can see that when looking at this graphic right here, because new listings started to increase really big time, starting really in February, all the way until we hit the summer months here back in June and May. But of course, this year, 2023, it's going to be interesting to see what happens because, of course, a lot of people still have historically low rates. And of course, rates are still about 6% right now, which is more or less double the rate back in 2020 through 2021. And of course, I'll definitely keep you posted with the latest developments, of course. Realtor.com also goes on to say the following here. The number of houses for sale or house inventory in the 50 largest cities in the US has increased by 74.6% compared to the same time frame 1 year ago, which is December 2021. So housing inventory in the 50 largest cities increased by almost 75%, whereas the nation's averages increased by about 55%. So the most populous US cities are increasing at a faster pace compared to the national averages here. The West region had the biggest growth of active listings with a 110.2% increase compared to last year. The South region also saw the second most growth with a 103.9% increase in the number of houses for sale in the West. In contrast, though, the Midwest and the Northeast regions had a slower growth rate of 28% and a 16.8% increase, respectively. Active listings in the West nearly reached pre-pandemic levels of 2019, only down by 3.9%. That's interesting to note that housing inventory in the West as a whole is only down 3.9% compared to 2019. I would imagine they mean December 2019 compared to December 2022. Whereas other regions are still well below this benchmark. The Midwest is down by 40%. In the Northeast, are down about 38%. And in the South, they're down about 26.7% compared to pre-COVID levels. It's also important to note here that in December, there wasn't a single region in the US in which new listings increased compared to the previous year. In other words, out of these major regions in the US, every single region recorded decreases of new listings on a year-over-year basis. Inventory increased in 49 out of the 50 of the largest metros compared to 1 year ago. So the vast majority of the biggest cities in the US recorded increases of housing inventory on a year-over-year basis. Metros which saw the most inventory growth were actually in Raleigh, North Carolina. Look at that. Housing inventory increasing by 226.2% compared to December 2021. Nashville increasing a whopping 226%, and Austin, Texas increasing by almost 187%. The only metro to see inventory declines on a year-over-year basis was Hartford, Connecticut, down by 7.7%. Let's also talk about days in the market, or how fast or how slow houses are selling in the US. It says here the typical home spent 67 days in the market this December, which is 11 days longer than the same time frame 1 year ago. So houses are taking approximately 11 days longer to sell compared to 1 year ago. This is primarily fueling the growth of active listings, but homes spent 16 days fewer on the market this December as they did in the average December from 2017 through 2019. So what they're seeing right here is that because it's taking about 11 days slower to sell a house compared to the same time frame in 2021, this is one reason why active listings or housing inventory has been increasing. They also noted here that out of the 50 largest US metros, 45 of those had an increase of days in the market compared to the previous year. Of the 5 markets which saw a shrinking of days in the market, or a decrease of days in the market, houses selling faster compared to 1 year ago, the biggest declines were actually in Milwaukee. It was taking 16 days faster to sell a house compared to 1 year ago. And New Orleans down by 5 days compared to 1 year ago as well. Time in the market increased the most in Raleigh, up by 36 days. This means it's taking approximately 36 days longer to sell a house in Raleigh, North Carolina right now. Phoenix, Arizona also increasing a whopping 34 days, and Las Vegas increased by 33 days. And here's a chart showing days in the market over the past several years here, going back to 2017. Again, this yellowish line here is 2022. Here's 2020, and here's 2021. So days in the market at 67 days right now is more or less on par with 2020's levels, but above 2021. Also, when you compare this to 2017, 2019, as well as 2018, 67 days in the market right now is obviously below pre-COVID levels. But again, even though houses are selling faster compared to pre-COVID levels, our housing market's still slowing down big time, as you guys can see right here. One more thing I want to mention regarding days in the market, and actually this is something I actually just noticed here, is that days in the market back in May was approximately 30 days, well below the past several years, going back to 2017. I mean, look at 2018. Back then, days in the market was around 57 days, but last year, 2022, approximately 30 days in the market. So this means that days in the market has more than doubled from May through December of 2022. So the trajectory was absolutely skyrocketing ever since really July of last year. Now let's change gears a little bit and talk about asking prices in the nation. Let's talk about the national median list price. So that was $400,000 this December, down from the all-time record high of $449,000 that was set in June. And that's a decrease of 11.1%. So we're looking at asking prices in the US. Asking prices decreased by 11.1% from June 2022 through December 2022. When looking at sold prices, though, based on Redfin's data, home sold prices have decreased about 10% during that same time frame. So again, sold prices decreased by 10%, asking prices decreasing by 11% from June to December of 2022. And by the way, this represents a yearly growth rate of 8.4% of asking prices in the US on a yearly basis here. And this 8.4% rate is actually significant though, because this is the first time that asking prices have fallen below double digits since December of 2021. And here's a chart showing just that. The median list price in the US over the past several years. Again, way up here is 2022, an increase of 8.4%. Which obviously this gap here between 2021 and 2022 is much more narrow in December compared to June, for example, because in June, in 2021, asking prices on average were about $380,000, but back in 2022, over $440,000, about $449 to be exact. So the gap between 2021 2020 was far greater in June compared to December this year. Also, it's nice to see that asking prices have been coming down, but when looking at asking prices compared to pre-COVID levels, I mean, it's kind of laughable, right? Because asking prices at $400,000 this December, which is a December 2022, compare that to 2018, asking prices were around $300,000. And then in 2018, there were approximately, let's just call it a little bit less than 300,000. In 2017, asking prices were around $270,000. So in other words, even though asking prices have decreased about 11% over the past 6 months, when compared to pre-COVID levels, I mean, asking prices went from $300,000 back in 2019 to $400,000 3 years later. And by my dumb math, that's an increase of about 33% over the past 3 years for asking prices in the US. Speaking of asking prices in the US, have a look at this because this is pretty insane. In Milwaukee, Wisconsin, asking prices increased a whopping 46.2% from December 2021 to December 2022, increasing by 46%. Memphis, Tennessee increased by 34%, and Miami increased by 20.4%. Realtor.com also provided a table here showing how each of the major regions in the US fare, because there's some very big differences. And by the way, I'm going to be sharing some cities in the US and see how those compare as well regarding all these metrics I'm talking about in today's video. So on a regional basis, of course, that's the Midwest, the Northeast, the South, and the West. Look at this. Active listing count, which of course is housing inventory, increased a whopping 110.2% in the West and over 100% in the South. Look at this though, the Midwest and the Northeast only increasing by 16 and 28% respectively here. So far greater inventory growth in the Midwest and the Northeast compared to the South and the West. Regarding new listings decreased the most in the West, decreasing by 32.5%, whereas in the South only decreasing by 17%. When looking at asking prices, look at this. The Midwest increased by 12.2%, whereas in the West only increasing by 3%. Huge differences there. When talking about days in the market, it's taking about 5 days longer to sell a house in the Midwest as well as the Northeast, whereas we saw double-digit increases in the South and also in the West. So very big differences compared to the region here. The West seems to be having the most trouble here, increasing by only 3% for home prices and a giant increase of housing inventory. So here's something I want to share with you guys as well. Here's Austin, Texas right here. Look at this. Asking prices decreased by 3.4%. The median list price, or the median asking price of newly listed houses was $525,000. Look at this though. Active listings increased by 186.6%. This is quite remarkable because look at this. New listings decreased by 18.8%. So even though new listings decreased by 19% on a year-over-year basis, active listings are absolutely skyrocketing. Some other cities that's worth mentioning as well here is this right here. Look at this. Cincinnati, Ohio, increasing by 9.4%. Columbus, Ohio, asking prices increasing by 13.7%, only an increase of 39.9% of housing inventory. Look at Dallas. Housing inventory increasing by 160.8% and asking prices increasing by 8.8%. Denver as well. Look at this, down 4%, whereas inventory increasing by 146%. That's pretty astonishing there. Look at this. Houston, Texas, flat for asking prices on a year-over-year basis, and housing inventory up by almost 50%. What else can we show you guys? Kansas City, look at that. Asking prices increased by 20%, and housing inventory up by 61%. Las Vegas, again, a huge increase of housing supply, and asking prices decreased by 2.2%. We're also seeing huge increases of housing supply in Los Angeles as well, and Memphis, Tennessee increased by 115.6%. Look at Miami, up by 20.4% for asking prices, and housing inventory only increased by 53%. And look at Milwaukee, housing supply only increased by 7.1%, whereas their listing prices increased almost 50% on a year-over-year basis. Absolutely insane. Giant increase of housing supply in Nashville, Tennessee. Asking prices increased by 12%. Where else can we show you guys? Giant increase in Orlando. Look at that. Housing inventory increasing by 119% there. Absolutely crazy. Phoenix increasing by 165.5%. Prices declining by 2.4% there. And what else we have here? Raleigh, North Carolina. Giant increase of housing supply, 226%. Asking prices increasing by 5.7%. Riverside. A lot of people ask about Riverside. Housing supply increasing by 114%, and prices only rising by 1.6%. What else we have here? San Antonio, Texas. A lot of people ask about that. Big increase, almost double compared to 1 year ago. 99% rise there. San Diego, asking prices on average, or should not average, the median asking price just under $900,000, and a rise of 96.1% of housing inventory on a year-over-year basis. San Francisco up by 57%, prices up by 4.6%. Look at that though, in San Jose, down by 44% on a year-over-year basis here. We also saw huge increases in Seattle of housing inventory, up by 176%. In Tampa, up by 171%. And the list goes on and on here. So I'll provide a link to this video. I won't provide a link to this video. I'll provide a link to this article so you guys can take a look at it if you guys want. But I definitely appreciate you guys watching this video. Please comment below with your biggest takeaways from today's video. Also, if you guys got any value in this video whatsoever, then please hit the like button. I greatly appreciate that. Of course, I appreciate you. Hope you guys have an awesome day, and look forward to seeing you on the next video.